So today we have Marianne Bartels, who needs no introduction, so I'm not going to give her one. Marianne, it's not her first rodeo. She has a very keen eye for markets. What I love about Marianne, as opposed to yours truly, she's a normie. She calls them like she sees them, unlike yours truly, who has an opinion. And then if the charts doesn't match the opinion, I just say we'll turn the charts upside down. Marianne is an honest broker. And I'd like to remind everybody, and I didn't have time to do this. It's too lazy. Marianne, I was going to take clips from your last appearance. We were together on April 15th, 2025, in the midst of the Trump tantrum, whatever. I think it was just a few days after we were together on Making Money with Charles Payne on Fox. And you said then, you're like, oh, this is temporary. This too shall pass. I'm still bullish longer term. Blah, 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 blah. And I was saying the opposite, and we were both right. Very short term, it was a disaster, but boy, were you right. So, Marianne, my hat's off to you. You get them right, you get them wrong. The haters will throw hate and shade at you when you get it wrong, but I think I need to call you out for being so right in your call last year. So, congratulations, Marianne.
Thank you, George. I appreciate that very much.
That's good. All right, so what have you done for me lately? Kind of a business. You're only good as your latest trade. So you know, some people want to take victory laps. Are exhausted. They can't speak. That's not the way you roll. Head down, forward march. By the way, I had an offline conversation with somebody before we started today. They wanted to come into the space, and I'm not going to mention names in the Federal Witness Protection Program. But this guy's kind of annoyed me the last few times. He keeps talking about back in the day and this and that, 20 years ago and 30 years ago, and how he bought this 25 years ago. And I'm like, dude, like nobody cares about that stuff. We're here to help people. Only look forward, not backwards. All right. If you do a good job, let other people compliment you, just like I'm complimenting you, Marianne. So, Marianne, there's a lot going on here. I'm not. I'm just. We're just gonna get right into it. A lot of noise, a lot of disparate movements, seemingly unrelated, but I think very related. Whether it's tech starting to underperform, the dollar going down, commodities going up, emerging markets going up, small caps outperforming large caps, energy doing better, blah 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 blah. To me, they're all symptoms of a bigger roadmap of what's going on globally, and I think you and I are on the same page because we spoke about this a few days ago. So, to me, it looks pretty clear as to what's happening. I love when a plan comes together. Sometimes it's just not clear. For me, it's go wrong with confidence. I used to joke with you all the time. Go wrong with confidence, right? I think it's pretty clear what the playbook is right now, and it doesn't matter what I think. One's being rewarded for following this playbook, and I think you have the playbook. So, Marianne, I'm going to stop. I want you to take over. Take as much time as you want. We're trying to help the folks in the room think about markets, what they should do. So, what's top of mind for you? What are your convictions? The floor is yours, Marianne. Welcome.
Thank you. Thank you so much for having me back. When I was writing my year ahead, George, I always look for a title that I can carry throughout the year that has meaning. And I called it Be Fearless Global. There's a global secular bull market. So I do believe the equity market remains in a secular bull market. But what I started to see is that markets outside of the United States were moving into a secular bull market. Now, the US by the S&P 500 moved into a secular bull market in 2013. So what does the secular bull market mean to a technician? It means when you take out the prior all-time high and that you're going into another whole new range. And when I was looking around the world, everything was breaking out into a secular bull market. Japan moved into a secular bull market after being in a secular bear market for 35 years. Europe was breaking out into a secular bull market, and emerging markets ex China were moving into a secular bull market. And George, I can't remember a time in my career where I said all equity markets around the world, basically, we're in a secular bull market at the same time. And the US is in the later stages of its bull market. The international markets are in their early stage. I've been saying I think the US peaks somewhere around 2029, 2030. That's a guess. But something my aunt taught me. My aunt was a technician for many, many years on Wall Street. Her name was Bernadette Bartels Murphy. She was on Louis Rukeyser. She was one of the elves. And she taught me a lot of things, but one of the things she taught me, she says, before you end your secular bull market, your new leadership starts showing up. And that's what's happening now. The international markets are new leadership. Energy just broke out. That's new leadership. Commodities, particularly raw industrial and precious metals, are in a new secular bull market. Um, so there's a lot of things that are happening. Um, and when I think there's inflation, I'm worried about inflation. But I think the 10-year Treasury yield told us that a while ago. So if you look at the 10-year Treasury yield from the 1980s, the peak in the early 1980, to where we stand today, we've reversed that downtrend. And what that means is that we've started an uptrend. So I think you're in the sweet spot of inflation, right? There's good inflation. It helps corporate earnings. We're seeing corporate earnings come in really strong. But you are starting to see pricing pressures. And I'm concerned you're going to see more pricing pressure on PPI because of the raw industrial metals breaking out. And I think we're going to stay, right? The disinflation, deflationary environment is over. This is clearly an inflationary environment that will ebb and flow. And I think gold's picked up on that a long time ago. But there's a lot to gold. It's not just about inflation, it's also about interest rates coming down. It's about geopolitical risk, safety. And particularly, what's really driving strong demand is emerging market central banks diversifying out of dollars into gold. And I don't think that's going to stop. So that's the side on gold. And then when we looked at silver, we expected silver to break out this year because we used to call that poor man's gold. With gold up so much, we figured silver would start moving, and it has, and it's had extraordinary moves. But I don't think these moves are over. Silver is a different metal. It's an industrial metal. It's traditionally not used as an asset in a portfolio, although people will own it in terms of coins. I do think silver will continue to go up. Now, there's been talk about supply disruptions coming out of Asia, particularly in China. But I think commodities are in a secular bull market. What's holding the overall complex down is crude oil. And that's because the president is really trying to keep crude down. But I think there's a lot going on underneath. In terms of the equity market, I just think tech is in a correction. It's been up an extraordinarily large amount, particularly certain companies in semiconductors. To me, semiconductors are the true leadership of the market. And when that leadership ends, the secular bull market ends, I don't see that happening. But I do think we're in a corrective phase for tech related. That means growth stocks. Growth stocks are in a bear market. But I don't think it's the end of their cycle. I do think they'll eventually come back, but value is the winner. What really started working in value were financials, particularly the banks. I know part of the financials aren't working, but I really do like the banks. I like the regional banks. I think under Walsh, you're going to get a lot of deregulation. What I'm hearing, what he really wants to do is deregulate the financial system, have the banks provide the liquidity, and then he can pare back the Fed's balance sheet. Um, he had to have made a deal with Trump to lower rates, so I do think he'll lower rates, but he really wants the deregulation of the banks. He wants the banks to be able to provide more liquidity to the markets, probably particularly to the bond market. And I think over time we'll see consolidation. So I like both the large banks and the regional banks, but the regional banks have lagged, and I think you'll see them catch up. The other pocket in value that I really like is energy. That is broken out. It's broken out across the board. So I think you've reached really extraordinary low levels, like in the oil service stocks. I think they've officially bottomed. The stronger part of the market that's been reaching new highs is more in the refining and marketing, but that's because you have shortages there. But I think energy is finally in a new bull market, and it's the cheapest sector and has been the cheapest sector in the market for a really long time. Now, staples are moving. I think that's just a value trade, not something I really want to own for the long term, but I think tactically that will continue to do well. The other thing that's significantly changed is small cap. I've been a bear on small cap for a long time. I went bullish small cap. I think you're starting to see earnings bottom. You're starting to see estimate revisions improve. So I do think this is not just a January effect for small cap. I do think that there's leadership there. And when we end the secular bull market, small cap will take over. So mega cap has been the leadership. I think the new leadership in the next decade will be small cap. It'll be the international markets and it'll be value. But part of that is already showing up now. So those are my general overall comments.
That's terrific, Marianne. So much to unpack. But what I really like is you put the pieces together in a cohesive fashion. As I like to often say, it's not just the what, but the why. And there's a lot of corroborating things that fit together. And so it's scary. We haven't talked in a good while, but I'm virtually 99, if not 100%. I'll say 99 because nothing's ever 100%. I'm 99% in agreement with you. So let's get into it a little bit further. Let's unpack this. So, and I see Joe, my good friend Joe Carlosari, in this space as well. Joe, if Joe wants to hop up here, that'd be great. We were stuck in a space yesterday, and some guy was blathering on. I'm told you should, you can praise specifically, but criticize generally. So I'm not going to name names. But Joe knows who I'm talking about. There was this guy in there who was trying to school everybody, going on about BDCs and the world's going to blow up and blah 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 blah. And I think Joe raised the point, or somebody did. It's like, in what you got? As you just pointed out, regional banks breaking out to a new high. Like, tell me more about this financial crisis again, okay? So you're right, Marianne. I mean, if the markets were to take a big dirt nap here, and of course anything is possible on a short-term basis, you're not seeing the types of things that you would look for. This is not what you see in a bear market. And as you rightly point out, the party's just getting started. So for me, the rallying cry I've been using with it's R, but not R for recession, R for rotation. It's rotation. So some people who are butthurt because they got run over in their software stocks or AI or whatever, yeah, they're in their own. Stan Weinstein would call it private bear market. But it's not a private bear market. It's very public. Those things are getting obliterated, and they were amazed. Like, explain to me again. Like, how is the S&P's only down 2% from the high? This was a few days ago. If I'm not mistaken, I think the Dow made a new high on Friday. So we can BS each other about the indices, but Marianne, as we all know, that's not where the action is. It's a market of stocks. You got to get your sectors and your stocks right. And so you know, let's just hone in on where we think we can make some money. I think you're completely right. One of the points I've been making, I think you're right. I'm going to challenge you. I believe, and I think we discussed this earlier, that this year, 2026, is going to be a good year for stock pickers because if tech just goes into a rest, forget about big decline. I think it's going to be a big decline, but leave that aside. Let's just say we get a bear market and time that price for tech. It just doesn't go anywhere. It's overachieved. It's entitled to rest. With all this other stuff coming on strong, the ability to beat the market by picking stocks and putting money into commodities and farm markets and value and all this other stuff, it's going to be, I think, very easy to beat the market. And I'll repeat the story I threw at you earlier, and I said in the space the other day. Back in the '80s, if you were running a portfolio, non-U.S. portfolio, it didn't matter how expensive the Japanese market was, because the Japanese market, despite getting up to 16 times earnings, it kept on winning and winning and winning. To paraphrase our president, it got up to two-thirds of the index, 66% of EFA. So if you don't own Japanese stocks, you were dead. But once the Japanese market peaked, all you had to do was avoid Japan and just buy everything else. And I kind of think, and again, this doesn't mean the end of tech. It could just be a rest. I kind of think, looking at this year, that just getting away from this tech leadership, the semis have done so incredibly well. The AI stocks have done so incredibly well. Frankly, there'd be something wrong if they didn't have at least a rest. So the question. I'm sorry, I'm rattling off the mouth, but you triggered me, Marianne. I think it's going to be a great year for stock picking, and it's going to be an easy year to outperform the index. What say you?
I would 100% agree with you because you don't have 7 stocks or 10 stocks dominating the performance. So I think that's really important. And another thing that happened that's really important, and you triggered my memory, the Dow did hit a record all-time high, but not just the Dow, the transportation average has broken out. We finally got that to break out into a new secular bull market. We finally surpassed their previous high of 22. And so you're absolutely correct. This is a rotational market. You can make money in this market. And I think if you're out of the right stocks and in the right stocks, you can do really well. But it is a midterm election year. On average, we can be down 15 to almost 20%
Yep.
intra-year in a midterm election year. And I think this is going to be a very traditional midterm election year.
Marianne, sorry, I'm just the hot-headed Jewish kid from New Jersey. So, but you're used to dealing with New York types, so not a problem. Um, so so if we do get that typical year, it's down 15. We know what the leadership's going to be on the downside. It's the stuff which is resting. So even if you don't get into a fundamental debate about it, I just that pours gasoline on my fire. I want to bring Joe Carlasari into the room because um, Joe was very outspoken, and I'm totally with Joe. And I think Joe probably has some good observations that'll dovetail with yours. And I love Joe. He's a smart guy. Plus, he's agreeing with me. So anyway, Joe, are you there, my friend?
Yes. Hi, George. How you doing?
Good, good, good. So, Joe, we were in that space yesterday. God, that was painful. Um, so, I think particularly interesting for people would be your perspective. I was really enjoyed your point about people having PTSD post the GFC and how that's coloring a lot of people's perceptions. Could you just riff on that for a little bit?
Well, it's not just isolated to the GFC. It's all these sort of turbulent events. I think primarily right now the market's suffering the same issue with respect to inflation and the boogeyman of inflation. We hear about that despite disinflationary out there. What I was going to ask Marianne, I was curious coming in here, just hearing a little bit of this, is you see these materials and regional banks and green shoots and signs of a broadening out of the economy here outside of mega cap tech. What is that? What's the forecast here for the rates picture? Because that's the thing that I keep scratching my head at. Is the 10-year yield here? Is 10-year going to sell off? Do we expect to creep back up to 4.5, that range? Because to me, if you're looking for like something that can derail this whole thing, yields are perhaps one of the big question marks in my mind. Put it that way.
So one of the risks that are out there is that the 10-year can rise. The resistance levels are 4.344. If you break 4.4, then you're 4.5, and you could risk going up to 5. That could be definitely a risk factor, but that's in the context of still rates on a short-term basis, relatively short-term basis, in a decline. I don't think they want rates up around 5%. I'll think that if rates start climbing close to 5, they'll try to do something to get rates back down. Short rates are definitely
Well, what
in
is
a,
that? What does that do something? Well, can you color that in a little bit more?
you mean, well, I'm concerned we get strong PPI numbers in terms of inflation.
Same.
That's where I see part of the risk factor is that there's what I've been trying to battle in my brain, and I don't recall ever seeing this. It doesn't mean it didn't happen before, but I don't remember it, where CPI can come down and PPI goes up, right? If that shelter component in CPI comes down, then maybe CPI comes down. But what happens if PPI goes up because raw industrial prices have had a significant technical breakout? Manufacturing data, we just got the ISM manufacturing data. We're finally out of a recession, I think, in manufacturing. So there's going to be pockets of inflationary pressure. Plus, if the economy right now, the Atlanta GDP now tracker is showing that the economy is growing at 4%, right? What Trump wants is an economy where we're growing hot, but productivity continues to go up. So that kind of keeps some pressure on wages and interest rates down. And I think he's getting that. We're starting to see a big uptick in the economy, especially if manufacturing picks up. We've already started to see productivity pick up. I think we're going to have productivity gains very similar to the late 1990s. So the market has to get used to that. And it might get spooked on some of the data, but if they can keep CPI down and keep productivity numbers up and keep wages stable, we may have a sweet spot. but you may get a data point every now and then that just gives the market a hiccup.
Yeah, but that's not a big deal, right? If you keep it in that range where it's relatively contained, say you have, higher than the target CPI, and they're prepared to just take that and run with it for in exchange for higher economic growth. That's the trade. That to me, that doesn't seem like that bad of a bargain, and that seems like a great environment for non-mega cap tech.
Absolutely. Absolutely. And that's why I think you're seeing small caps break out. And I think that's why if you talk to small cap fund managers, they're jumping up and down, it's time to buy our stocks because they're um seeing earnings come through.
Let me ask
So
you
I
this:
absolutely 100%
are you
agree.
if you had to pick? It sounds like you're more excited about small caps, U.S. domestic small caps, than foreign equities. Is that fair?
No, I'd rather go foreign. I would to rank order them. I think emerging markets, Japan, Europe, small cap.
Okay, I may have missed this. Can you unpack that the distinction between why you would overweight foreign?
It's the first time in my career, and I've been doing this for 40 years, that I've seen non-US markets go into a secular bull market all at the same time. Normally, it's one pocket. It's every market except for China is in a secular bull market. It's extraordinary. The US is still in a secular bull market, but it's in the later stages of the secular bull market. International markets just went into a secular bull market, and they can last 15 to 20 years. And and when I look at US portfolios, they're not diversified generally outside of the United States. The exposure by domestic investors is extraordinarily low. And I think over time, that's going to be a broad pocket that you're going to really see portfolios diversify into. But I'm not saying I don't like small cap. I do. I think large cap, mega cap will come back. That's my call. Is I think mega cap comes
Hey,
back.
hey, 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 hey. Sorry to interrupt you guys. Can you hear me now?
Yes.
Yeah, I can hear
Yeah.
you.
O'Hare saved my butt. So I'm gonna leave O'Hare and Bitcoin Tina and Joe to kind of paper over the next few minutes because I missed the last 5 or 10 minutes. So
Well,
keep going,
well,
guys.
just
Great job. Yeah,
invite
go ahead.
David up. Somebody before you go, George.
Yeah,
Invite
I,
Dave.
I
yeah. All
invited
right,
David up. Yep.
I sent Dave Nikowski
all
an
right,
invite.
okay, all right, guys. So Bitcoin Tina, O'Hare, and Joe. If I lose you, and by the crazy thing was, I wasn't moving. I was sitting in the parking lot. There was nothing was going on. All right, keep going. Carry on. Go ahead. Sorry to interrupt you, Marion. Go ahead. Go ahead.
Well, you're saying, Marianne, that you thought large cap's going to go back. So it sounds like you think it's just a relative outperformance. That there's those.
I think this year you get relative outperformance, but I think once the secular bull market ends, meaning tech finally peaks, right? Growth finally peaks, the new leadership will stay with small cap. I just don't think they're going to take over leadership. I think it's a tactical leadership move. I still think we're going to have a bubble in tech. I think we're in the early stages of building a bubble, and I'm
Whoa.
looking for a major blow off top.
Marianne, in 2026, can you please put a market cap range on small cap and a market cap range on mid cap? Because what I consider small cap from the mid 90s is very different than small cap in
What?
2026. But just
So
market cap size.
I have no idea whatever is defined by the Russell 2000 or the S&P 600. I don't know, and I'm not in front of my computer right now. I don't know what that's defined as, but those indexes are what I'm
I, I,
using.
I think generally speaking, the way we look at it, and Bitcoin King, that's a great question. I think it's a very relevant question in this
No, it's
environment.
roughly 2 to 3 billion.
Well,
Small,
this is the
yeah,
way I
it's
look
two
at
to
it.
three
I,
billion is the small cap.
I would say,
ASCS is in IWM, and that's 37 billion.
can you hear me?
Yes, sir.
Yeah, I would just whatever you thought it was historically, just double that number. That's kind of where you want to be.
Yeah. So it's a market of stocks. There's a lot to do. It's a very rich environment, Marianne, both on the long and the short side. No.
It's very broad now. The advanced decline lines have been hitting record all-time highs. We're finally getting the breath that everybody's been wanting. And that will just a rotational market keeps a bull market alive. You want
Right.
rotation.
Right.
So the bull market is still alive. It's not dead.
So, Marianne, if you were look, the road to hell is paved with good intentions. So you have positives and negatives. It sounds like obviously the positives vastly outweigh the negatives for you. But if we're sitting here 6 months from now and we don't have a smile on our face, so on the way to the bank something didn't quite work out, like what are the things you're looking at? What should be worried about? Like what if you had to make up? Is it possible? You mentioned, for instance, you think inflation's not dead, bonds could be trouble. I don't know. Like make up a maybe it's only 10% chance in your view, but if you had to make up a bear story, how would the bear story go?
Inflation gets really bad and the Fed has to raise rates.
Okay,
That would be really bad.
okay.
But the
Um,
weakness in labor seems to be, a countervailing force to that. I mean, it's very minor, right? But that's almost
sure.
like a Goldilocks scenario, right? So when people, Michael Kantrowitz talks about this all the time, like when people are misinterpreting the modest rise in weakness, rise in unemployment and weakness in the labor market as somehow being a negative, that could be actually a positive for putting a lid on the inflationary
Yep.
pressures.
100%, Joe. It's just like, we're trying to like you're a lawyer, okay? Like if I assign you the losing side, like, put some lipstick on the pig, make a case. So like, if that's the best Marianne can do, and you're like, well, I'm not really worried about that because of what you just said. Well, that's a very helpful discussion. So yeah. So Marianne, can you talk a little more? Let's go back into gold and silver. Um, I love gold and silver. So I'm not getting you to talk my book. It's like put narrative aside. They've done. I mean, it's very powerful markets. But particularly the recent volatility and such, it scared a lot of people. So let's not talk really short term, but looking at a little bit bigger picture. Talk to me about either in terms of price or duration. Where do you think gold and silver, and in particular the gold miners, how do those look to you? Where do you think they could go?
So I'll start off with the precious metals. I think gold is tracking towards 8,000 to 10,000. That's my long-term target. I've got a $200 target on silver. And what happened is they just became very crowded, very leveraged positions
Right.
that needed to be unwound. But I don't think the secular bull market has ended there. But I've been telling people if you haven't owned anything, buy the mining stocks because they've lagged behind the metal prices.
Mm-hmm.
So I love gold mining, I love silver mining, and I even love copper mining, right? It's hard to buy copper itself, but if we're really going to build out this new electric grid and manufacturing, we don't have enough copper.
Right.
And none of this stuff can you easily get to market. You can consider them scarce resources that are going to have high demand or continued high demand. And that just says prices are going higher. So I love anything to do with precious metals, whether it's the stocks or the underlying metal, I still like.
Um, okay. So, and maybe this is a distinction without a difference, but if I said to you, you know, I give you three choices: GLD, gold, or silver, SLV, or GDX. Let's just use as a proxy for the miners. How would you rank order those?
I think from an investment standpoint, I'd still go with the stocks GDX, but I think silver will go up the most
Okay. So that's
percentage wise.
got it.
But silver, silver's going to bounce around and have extreme volatility. I don't know how much volatility your listeners can take,
Right.
but I have very high confidence in owning GDX or GDXJ, the juniors. I prefer the juniors. They have a little bit more beta to them.
Yeah, they got more juice. You always like the action, Marianne. We all do.
I do.
I know. Well, okay, but now that's going to lead into Bitcoin. Okay, so we're not going to talk narrative. Okay, so I know some people are going to be butthurt that we're not going to say nice things about Bitcoin, or at least I'll say
George,
not
you
nice
love
things about
talking
it.
about Bitcoin. You talk about Bitcoin more than Bitcoiners. I feel
There
like.
you go. No. Because Joe, what I want to do is provide. Listen, you forgot more about Bitcoin than I'll ever know. I think the only value I can provide is trying to give the context, the bigger TradFi context for Bitcoin and the whole Michael Howell liquidity thing. Which, by the way, I have to interrupt this for a commercial message. I've been writing on my Substack for like 4 or 5 weeks, and we got stock picks in there. We're going to be putting portfolios in there, but there's a new feature in there which you should run, not walk. I want everyone to sign up for it. Various of my friends, guys you love, Michael Howell, John Roque, um, Louis Gave, John Carl Nautilus Research, they've all graciously allowed me to share gratis their paywall research. So if you go and look, yesterday I posted Michael Howell's most recent missive on liquidity, and he thinks we're starting to run into a problem. But more importantly, for trying to help the reader, the viewer, listeners, he does not offer trials. His is all paid. But since I've known Michael for 40 years, he's like, okay, George, you can give that out for free. So a regular feature of my Substack is going to be research, paywalled research, which is otherwise not available. And, some of it will be free. Some of it will be paid. I'm going to be putting up a paid Substack. So here comes the commercial message. And the last thing, and we'll get back to Marianne. I am doing a conference. I know most of you know that. I'm not going to get rich off of this. It's $99. This is just to help people, educate people. We did a couple of these last summer. They were very successful. 15 of the best thinkers out there, investment minds. Speaking of gold and silver, we've got Tavi Costa, Scott Funds, you all know him. So funds up 100% last year. Don Direct, goldstock.com. What's his name? My friend, Mr. Mullen, out in San Francisco. Buy side guy X Templeton, his fund was up over 100% last year. Tom Chanos, famous short seller, et cetera, et cetera, et cetera. Adam Parker. I mean, the list goes on. This is the highest level of good thinkers you're going to find. And you can watch this on March 11th, only $99. This is the type of thing. I mean, I really think this conference is better than any other conference you'll ever go to because the content is better. You don't have to listen to me. It's not my ideas. I'm just kind of like, I'm putting on a concert and I'm assembling the best musicians in the world to perform. So, if we get enough of a turnout, we'll do this on a regular basis. It's $99. You can't go out to dinner for $99. So if you don't buy this conference, you are not serious about your portfolio. Sorry about that. I had to get it off my chest. So, Marianne, you like the juice, you like the SLV. That's great. What about
What?
Bitcoin though? Bitcoin's gone to sleep. What's going on?
So this was really interesting. I've been in the crypto world for a number of years. After I retired, I took a course on crypto, and I traded crypto. I've traded it all, and I believe that I've always believed that Bitcoin is representative of the world going digital. There's going to be a day that there's no paper money, no coin money. We're going to do everything electronically. And Bitcoin is that representative store of value. Everything else, Ethereum, Solana, Chainlink, all that other are forms of technology. Basically, what we're doing is we're upgrading the internet to Web 3.0. But as you know, Bitcoin is extremely volatile. And what I found fascinating when I was talking to people in the crypto world, that's what they do for a living, many did not believe we would have a crypto winter because this is the halving year. And that's when the bit miners get paid half in Bitcoin. And every time we've had the halving, Bitcoin has gone down substantially and it's called a crypto winter. Many of them did not believe we would have a crypto winter this year because there were so many new players. Well, crypto winter is here. Bitcoin broke down from a head and shoulders pattern, and I marked it in a range of 60,000 to 40,000. It crashed to 60,000. We bounced off of 60,000, but I don't think we've made a bottom yet. So I think you're in crypto winter. And will it come back? I believe it'll come back, but I expect extreme volatility. But Bitcoin, George, Bitcoin is really a good proxy for liquidity.
Okay.
I use that as a measure of risk and a measure of liquidity. And with Bitcoin collapsing, that tells me there's a liquidity problem and that we're going to continue to have high volatility.
Right, which is brilliant because again, I urge everyone to run that walk to my Substack. Sorry, I'm shilling this. I feel like I'm selling dishes or whatever. Michael Howell gives a fundamental case, which dovetails perfectly with your technical case. So, as the saying goes, I love when a plan comes together. All right, Bitcoin Tina and O'Hare. Since I disappeared for 5 minutes, who Who we want Nikoski to talk, or who's going to talk next?
Well, let me just hop in for a second. I think we had Nikoski, but I want to ask Marianne a question real quick
Yep.
related to Bitcoin. But before I do, I would just want to say it's funny that you keep bringing up your Substack, and I think people should go take a look at it. But it's funny you say it, you're shilling it. Not only are you shilling it, George, but you're doing it out of the back of your car. That's the funniest part. But anyways, a little bit of joke here. But anyway, Marianne, I just wanted to ask you. We do speak a lot about Bitcoin on X. I frequent the Bitcoin spaces. I've been a student of crypto since kind of the inception, being here in the Bay Area. I have a lot of friends that have been involved in it. uh, you just said that you kind of like Bitcoin and you think there's going to be this shift into digital versus hard, kind of a tangible money, coins, paper, things like that. We already kind of have that. We've been making that shift for a couple of decades. I want to ask you, with regard to Bitcoin specifically, how does that differ in your mind from the stablecoin revolution that's literally happening right before our very eyes? Because we have something that's on the blockchain now that are going to be used, which are stable coins for that. Is that going to change your view on Bitcoin going forward with the stable coin revolution?
So that's a phenomenal question, a very important question. Stablecoin is huge, right? Because what is stablecoin? Stablecoins are digital dollars. And will that distract a little bit from Bitcoin? It probably will. But the value of stablecoins doesn't change, but the value of Bitcoin changes. That's probably the big difference. And we've seen a huge uptick in the use of stablecoins. The value that moves in terms of stablecoins is really starting to outpace what we even see on Visa and MasterCard. And where you see stablecoins used a lot is either in businesses or outside of the United States in countries that don't have a stable currency. But to me, it's also brilliant to create stablecoin that has to own US treasuries because now you have a buyer for our US debt.
Oh, yeah.
It's brilliant. It's brilliant.
Yeah. So Marianne, oh, here, I just want to understand. I think I got it. A brilliant question out here as a compliment. Deal with it. So Marianne, if if what do we need Bitcoins for if we got stable coins?
Stablecoin value doesn't change, Bitcoin value
There you
changes.
go. Bing, bing, bing. Thank you. O'Hare, I got to crack up because Joe was teasing me. I love to talk about Bitcoin. I can't
Yeah,
think of two TradFi clowns bigger than you or I who've taken
right.
our share of arrows about Bitcoin over the years. And here it is. You and I are bringing up the Bitcoin questions. Like, what the hell's going
Man,
on here? That is
yeah.
crazy. You gotta laugh. You gotta laugh at yourself. All right.
I'd prefer to hear about stocks, George. I'm tired of hearing about all this Bitcoin
This
stuff.
is great. Now we got Tina's a TradFi guy. All right.
Right.
All right. Who's got their hand? Who's next? Who's next here?
No,
Who's
I
next?
have a question on this because I really
Go.
want to just
And then, yeah,
again.
well, then we'll go to David after Joe. Go ahead, Joe.
Sorry, while we're on the stablecoin point, so honestly, I've helped a regional bank launch a stablecoin. I'll just tell you that my reaction is post the Genius Act passing that there's been sort of an underwhelming movement in the stablecoin market. I was looking at it. Correct me, fact check me on this, but I think the stablecoin market is actually down over the last several months in terms of its overall holdings. Most of the stablecoin usage, although Marianne is correct, is there's some pockets in emerging markets, et cetera. Most of it is used for crypto exchanges. It's for people that are selling, Bitcoin or Ethereum, and they're tethering out, they're moving out to a stablecoin to reduce their exposure to the price volatility of the more volatile assets. That's the vast majority of the stablecoin holdings are sort of derivative proxies for trading the more volatile assets. So I'm a little bit skeptical of this. I mean, I keep hearing about this, that stablecoins are going to eat the world, stablecoins are going to grow. But I'd be curious if people really think that's more than just a narrative, because I don't actually see it. I mean, I don't see the bigger
Well, I
players. They
I
have little
think
projects and they're not
All
actually,
right, counselor, hold on, counselor. I'll allow the question, but this is the last crypto-related question we're
of
going to take
course.
here. All right, go ahead. Go ahead. Who's going to answer that?
well, I
I
just
I mean,
go ahead,
I
Marianne. Yep.
I basically we're still very, very early stages. So you
Yes.
can't really extrapolate long-term trends based on short-term trends yet. Um, I think at least with our deficit situation, It's something that really helps insulate us in terms of having a buyer. And I think over time, I mean, even when you talk to individuals, the average person has no idea what a stable coin is. Now, this sounds terrible, but there's truth in it. Is in order for the world to go digital, you have to get rid of the baby boomers. Because the baby boomers are not a generation that are going to
Uh-oh.
adopt digital.
George, did you hear that?
Oh, hey, are we in trouble? Are we in trouble now here?
Well, I'm not a baby boomer. I'm an X, so I'm safe for now.
Oh shit! All right, you got to cover for me. Go ahead. Go ahead.
So I think there's a whole generational component to this. The younger generation is adopting, the digital world a lot faster because they grew up digital. Most of the wealth is held by baby boomers, right? So you're not going to transition to digital while the bulk of the wealth is with the baby boomers. This is going to play out over many decades, but it's a long-term structural shift, in my opinion. And this is part of the whole build out of AI, right? The whole blockchain, building out all these new smart contracts up on the blockchain. This is the whole next generation of digital. The way I describe when I give presentations to audiences, and it's in an audience that's particularly um, older, I start off with, my macro theme 50,000 feet up in the air. In the 1500s, what drove the US economy was agriculture. Your technology was a sundial. Our economy didn't dramatically shift until we created the steam engine. And that was in the 1700s. And we stayed that way until we became digital in the 1990s and 2000. We're going to be digital for hundreds of years. We're still in the infancy of digital. I don't think people understand that.
Wow.
No,
Um,
no,
is that
that makes tons of sense, and I know George wants to move on. I'll just say there's a distinction between digital and the blockchain, right? And we've heard this now for I mean, it's going on 12, 13 years about all the revolution that's coming in blockchain, and most of these companies are not actually using the blockchain. They're using more centralized systems, albeit digital systems. But other than stablecoins, which is like the one exception, I have not seen really anything of value in the quote unquote blockchain space.
All
It
right.
see's like a lot of hype and garbage, just
All
my
right.
view.
So, Joe, you know I love you, man, and I'm totally with you on that. I mean, we could do a special. We will do a space. We'll do a Bitcoin bear space, because I think the whole thing is garbage. But that's a whole other story. Let's just keep moving here. All right. I think, is Dave Nikoski next? Like, who is David? Got a chance to speak yet? Bitcoin, Tina.
No, David hasn't spoken yet.
Yeah,
David,
David was next.
David, are you there?
Yeah,
David, how cold?
I'm here.
How cold is it in Frostbite Falls, Minnesota, right now?
24 degrees.
How much?
Short weather for us.
How much? What?
24.
Oh man, I got the shorts out and the t-shirt. All right, ma'am.
Got
All
the
He's
right.
got his
Okay.
t-shirt,
suntan
t-shirt.
lotion out.
All right. So Dave, what you got for Marianne? You agree, disagree? I think you got. By the way, for those of you who didn't see it, Dave and I did a great podcast about 10 days ago. I think you and Marianne could be sisters, Dave, because they're singing from the same prayer book. So, Dave, have at it. Thoughts, comments, reactions?
Yeah, I agree with Marianne. I've been bullish emerging markets since December of last year, and I'm staying that route. I mean, whether you look at the ACWI, I think in my opinion, I think we're going through a commodity super cycle. Disconnecting and going from, connecting yourself to Japan or China for the last 40, 50 years to undo it, you're going to have a massive build out, and nationalism here leads to nationalism elsewhere. I think you're going to have Europe curb their spending of buying U.S. goods. I think Canada, Mexico, Brazil. I saw a post today that exports from China are we're somewhere around 20%, and we're down to getting to about 7.5%. In that same timeline, from 2018 to currently, China has grown their exports, or their share of the Mexico and Brazil car markets, from 1% to 18%, and on par with the US market share in automobiles in both Mexico and Brazil. I think that a lot of other countries are enjoying the disinflationary forces that China provides, even though we curb our appetite for Chinese goods. So I see that taking place. when the dollar falls, and this is what I don't understand about stablecoin, you're tethering it to the US dollar. The US dollar is not in a bull market currently. Even with oil, the US uses 20% of the world's oil, the rest of it uses 80%. They are getting more buying power and have been for the last year. So I see that as a super cycle that's taking effect. I agree with Marianne regarding the infrastructure build out and the metals. Tungsten is up. It was the hottest metal last year. It's tungsten is used in everything, believe it or not. I mean, literally from bullets to semiconductors. I reposted an article I saw today on tungsten. But I think, again, you push nationalization here, every country is going to adopt the same thing. They're going to start worrying about themselves. I think Trump did one of the most amazing things that no one will give him credit for. And that is literally that countries got to stop making deals and they got to do what's best for them and not what's best for their neighbors. And I think that's the one thing that will get Europe off the path of shutting down nuclear plants, shutting down coal, shutting down things that would help them grow and move out of their funk that they've been in for 20 years. So I agree with Marianne about that as well.
So Dave, it sounds like you and Marianne are on the same page, which is great, because two of my favorite technicians, Smart Cookies, are saying the same thing. And I don't know, from my own biased narrative, it kind of fits fundamentally with what I'm saying. So that's terrific. Dave, if I had to ask you for, Mary, I'm going to ask you in a second, but I'm going to ask Dave first. If I said, Dave, pick 3 items between now and the end of the year. So I don't care about the next 3 days, 3 weeks, 3 months, but you got 11 months to go here. D's 31. Pick 3 items. It could be a stock, it could be an ETF, it could be a currency, it could be anything. Pick 3 items that are top of your dance card for the rest of this year. What would they be?
Aluminum, copper, and oil.
Okay. Marianne, back to you. Your 3 items for this year.
Wow. It's really hard to choose because I like so many things. I really like energy. I'm really impressed with what's happening there. I would own definitely metal stocks. There's whether you do GDX, GDXJ, there's also a global ETF for metals. And of course, I can't remember the name of it, but anything metals I would own.
Heavy metal. Okay. We're going to have some fun here. And O'Hare and Bitcoin Tina and Joe, you think you're getting off easy. You're not. You guys are all got to answer the question. I'm going to answer the question too. So, O'Hare, 3 items for the rest of the year. What would they be?
3 items like sector stocks. I mean,
Whatever
look,
you want. It could
I
be a
yeah,
single name, ETF, could be anything. Just pick
sure.
3 picks.
Sure. Well, I'm not going to get into single names, but I agree with Marianne. I think place you want to be this year that will outperform. I think is precious metals will continue to outperform,
Yep.
which I think the proxy would be mining stocks. I would prefer to own mining stocks over the GLD or SLV. I think the
Yep.
performance will be
Okay.
better.
Yep.
So that's number one. Number two would be energy. Up and down the energy patch, I would say probably I would be more inclined to stick kind of midstreamish.
Mhm.
Downstream, midstream, as opposed to upstream. And I would look at consumer staples as the other part of that.
So, O'Hare, you and I are best buds on energy. So, let me just jump in here before I give Bitcoin Tina and Joe a second to think about this. So, energy. So first of all, the miners, gold miners, silver miners, GDX over because of the operating
Yeah,
leverage. What people don't realize, I know you do, but many folks don't realize, is you mark to market the earnings estimates for these mining companies. If gold just stays where it is,
right.
I mean, a lot of things are like 10 times earnings now. It's crazy, all right? And that's before you start getting into, can gold go to 6,000, 8,000, 10,000, which I think
Well,
it will.
you guys have to remember the earnings that are just going to be coming out over the next couple of weeks for a lot of the miners. Those are those earnings are with gold and silver prices even
Right.
lower than they are now. So
Yeah, yeah. So
exactly. So if
to your
gold and
point. So
silver stay here,
yeah.
you're going to see massive
So
earnings
so
power.
so I commented on this the other day. So Barrick was one of the first ones to have their numbers the other
Hmm.
day, and I think that was with I want to say it was 4,200 or something like that in their numbers.
Yep.
So I mean that was a blowout, and that was on 4,200. And now we're wherever we are, 5,000 give or take. So
Right.
I think the gold stocks could go again. Do your own research. Everyone, don't come crying to me if you lose money. But where I sit, I mean, I've been all in the precious metals trade. To me, the miners just absolutely outstanding, and you don't need gold and silver prices to go up to make money in them. So I go with GDX
Correct.
number one.
Yep.
Number two, I would go with energy. And I want your pushback on this. Within energy, there were many ways to play the trade. You know, it could be explorers, could be integrateds, could be refiners, could be MLPs, this, that, whatever. Because I want juice in the upcycle, I'm going with energy service. I'm going to go with
Mm-hmm.
OIH.
Yep.
And you know, I did an interview a couple months ago. I tipped Schlumberger SLB just as representative large cap, but you know, these are stocks I know you all know. You may even own them: Tidewater, Valaris, all the rest. So
Correct.
I
Yeah.
think energy service
Yeah. Yeah.
would be
And
my other
specific,
pick.
George, specific to service and energy, I would focus for the folks that are listening, if you're inclined to look at energy as an allocation to your portfolio, I would look at subsectors like offshore.
Yeah,
Anything related to offshore, I think is going to do
that's
quite well.
That's been my favorite place there
Yeah.
yeah,
since
yeah,
July,
and
by far.
yeah, and
Yep.
Dave. I mean, we got what are some of the tickers? I know Tidewater and Valaris are two stocks I own,
We
but
got Noble, you got
yep,
Mm-hmm.
Tidewater. Baker Hughes makes natural gas turbines
right,
Mm-hmm.
for the energy market for data centers as well. Most people don't know that.
right.
You got Reg Transocean.
Mm-hmm.
You have Subsea
Mm-hmm.
SUBCY, which
Yep.
lays underground pipes.
Yeah,
You have
so Dave Nikasi, within energy, hasn't this been the leadership within energy?
Absolutely, from the start. And what I think part of that is that, again, we use 20% of the oil, the rest of the use is 80%. What you're seeing is the other continents don't have the geological shale formation that the U.S. does, and so you're having the majors spend there. And one of the first things that gave me a sign of that is looking at some of the physical companies that actually do underwater assessment. So you have like GEOS, MIND in there, and those things went just vertical in June. And it showed you that CapEx spend by the majors were starting to accelerate. And, you can sit there and say, look at their capital spend. It's where they allocate it to. I'm less bullish in the fracking areas in the US because I think with what you have going on globally, and it doesn't mean they're not bullish, they're all bullish, but the most bullish is offshore, and that's where you're seeing other countries have to pursue, their own
Right,
oil. And again, it's part
right.
of the nationalization issue, depending less on someone
So
else.
right, so
Um,
Dave, that's how. So I'll give my third pick, and then I'm going to go to Bitcoin, Tina, and then Joe. Um, I said gold miners, GDX. I say OIH. You can pick any of those stocks. Third one, because I'm an addict. I'm with Marianne. I love the juice. I actually think. I know this is hard to believe, given how much it's gotten killed the last, few days, crashing to levels not seen since 3 weeks ago. But I actually think SLV, it's like the redheaded, stepchild, in the metals area. I think that thing, in the platinum, the palladium, the less liquid, the better. They're just going to jam the shit out of this stuff. So, SLV right now, I don't know where it is, $80 or something like that. Like, to me, that could easily do 200, I think, sometime over the course of the year. But so, like, you want to think crazy, so those are my three picks. All right, Bitcoin, Tina, what do you got? Three picks for this year.
So you're telling us you're a degen, George? Is that what you're
Yeah,
saying? You're
well, you knew that already. That's why you like me. Okay,
and you want to do options on
no,
those
no,
small
no, no,
caps.
we're not allowing options, and we're not allowing stock, and we're not allowing stocks less than $5. It's a serious contest. I
Okay,
want, I
okay.
want, I want
So
three picks from you.
okay, well, I'll give you an area. I've been looking through a lot of charts, and there are a lot of breakouts. And I think that companies that receive the cash flow from the massive spend on AI, there's a 600 and some odd $1 billion spend. And there's a ton of names that are breaking out, and some of which are breaking out on multi-year basis on a monthly chart. So I think there's lots of areas. I think industrials is extremely interesting. I'm very interested. I'm very interested in Japan. I found a fund that I really like. They are heavy in the Japan trading companies. I think Japan becomes a huge beneficiary.
Okay.
And I think the way you play the precious metals, I get that you like the degen approach. But I think the royalty companies, I think you can own the royalty companies in 10 years And I don't know that you can own those miners in 10 years, but you can buy them and get a whole lot of them.
That's fair. That's fair. That's kind of the wimpy way out, though, Tina. Honestly, it's
well,
like,
yeah, I get it. You can. I'm happy to trade options and the other stuff, but if you think that this is a longer term trend,
Tina,
you hold royalties.
you're trying to get respectable now with recommending royalty companies. We know you're a total degen. So, like, just cut it out, all right? I'm teasing you, man. I'm teasing you. All right, hey, Joe, your turn. What do you got? What are your three? Joe, you there?
Yeah, three. I mean, obviously the industrial moves, materials look great,
Yep.
regional banks, but I mean, if I had to pick one, I thought it was one we were looking at. That's
All
what I
right,
was going for.
one. Just one thing. Yep.
Yeah, it's the EET, which is the Ultra MSCI Emerging Markets.
Yeah, I like that.
The EET is it's a leverage. Just get that juice.
Oh man, the degen. So you're telling the Bitcoin refugees, there's hope for them. There are sufficient degen products out there to satisfy all their needs. Is that what you're saying, Joe?
Get your leverage, get fixed on emerging markets.
Hey, Joe, is that 2x or 3x? What is that?
It's a 2x.
I gotta get.
That's not enough. That's not enough.
No, hey, don't worry. I'll fix it. I'm gonna get Matt Tuttle to do a 3x for us. Okay, so we'll fix that problem. There's a solution for that. I don't know what's going on in this space. This has just been unbelievable. All you guys are just phenomenal. So, Marianne, you hear all these crazies we got up here. What do you make of everything they're saying, Marianne?
I like everything you guys are saying. I don't know if that's a positive or a negative.
I got a question for Marianne with regard to the rates and the 10-year. It's been persistently high. I've been harping on this for like a couple years now. I think my personal view, based on kind of what we're looking at, what we do, is I think it's going to stay high. It's going to continue to stay higher than people expect. Jokingly, it's going to stay longer for higher, as I like to say it. And there are reasons for that, many reasons, not the least of which right now is we have something like 10 to 11 trillion, I think, right around that ballpark, of Treasury refinancing this year alone. Now, just to put that into perspective, going back to just 2018, 2019, it's literally just mind blowing how much new money, how much debt has just been created in a span of a very short number of years, and all of that, of course, has been very short term. What are your thoughts on all of this refinancing that needs to be done, and who's going to do that in the context of what the Trump administration has been doing, alienating a lot of our trading partners? How do you square that?
Well, that's where part of stablecoin comes in. What yeah, can you have an auction that goes bad? You can have an auction that goes bad. But the way I've always looked at debt, as long as you can fund the deficit, you're okay. So I understand your question, if in the sense that if you wind up not having or not being able to fund the deficit, that becomes a major problem. And
Well,
yes, and I'm sure
about
that's part of the risk premium that's in the long end of the bond. But my sense is it would hurt too many people if our bond market really blew up. So I'm really not concerned about that. I am longer term. I mean, I can give you a case where our interest rates go to 10% over the next 10 or 15 years.
So, Marianne, let me jump in here. I'm gonna stir the pot some more. So I agree with you. If the bond market blew up, that's gonna hurt a lot of people. So game theory. So you think about what would you do if you were pulling the levers? You say, okay, yield curve control, Michael Howell, please call your office, blah, blah, blah. They'll buy the bonds, blah, blah, blah. And then for $50 in double jeopardy, I love asking questions I already know the answer to. What does that do to the value of fiat currencies? And that just pours gasoline on your fire for your precious metal stocks. You like that reasoning?
Well,
vis-a-vis precious metals.
Correct.
Okay, well, here's the thing: the deregulation of the banks. If you can deregulate the banks and have the banks pull down part of that paper, that's part of your solution.
Yep. No.
Right now, they're restricted on how much paper they can have on their balance sheet.
100%. So well, here, just let me get a point here. So rates will be at levels lower than they should be, and therefore that's gonna do things to our currency. And by the way, there was a really interesting point. There's a read across from Japan. I put it in my thread in my feed yesterday. Someone was talking about the problem the Japanese are in, where yields are going up both short and long end. And he's making the case that, you know, there's an easy way to stop the yen weakness, and that is just let the yields go to where they should go. In other words, Japanese bond yields are still way too low. And he points to, I think the Japanese 10-year right now is like a 2.3 or something like that. But if you look at the 5-year forward, where with the rate, what the market's saying, it's calling Japanese 10 years at 4.6 or something like that. So Japan's in a tough place because they got all of that. If they want to weaken, if they want to stop the currency from falling, they got to raise rates. But if they raise rates a lot, that's going to cause other problems there. So, okay, not maybe to the extreme degree, but there's shades of that in the U.S. What do you think, Marianne?
Well, can I just say something
Please,
overall
please,
about currencies?
please.
Everybody's talking about the debasement of the US dollar. But what we should be talking about is that every major currency in the world is collapsing against gold. You chart every major currency against gold, and they're in a free fall.
100%. This is not about the dollar. This is about
It's not about the
this is
dollar.
about fiat currency depreciating in your pocket. Doesn't matter which piece of paper it is. Correct. 100%.
Exactly.
100%.
That's what we should be talking about.
You know, everyone likes to get into the dollar. That's like so missing the point. Yeah, the dollar was down 9% trade weighted last year, and it's down again this year. But for God's sake, compared to like gold up 60, silver up 130, it's irrelevant. Okay, like is the dollar going to go up or down against the yen? I don't know. That's a complete waste of time. All right, people like to talk about it as if they got or the euro. Okay, euro is a complete pile of garbage. That was up 9% last year. They're just so missing the point. I think you put your finger on it, Marianne. It's the debasement of all paper currency, and people need to understand that. So,
That's correct.
Eric, you
Okay,
got
can
your hand?
I
Yeah, Joe, go ahead. Go.
okay. So
We're gonna do Joe and then Eric. Go ahead.
I want
Go
to go
ahead,
back
Joe.
to this comment that O'Hare made. Okay,
Yep.
first of all, go to the tape. Right, you go about roughly a year ago. The 10-year was about 60, 70 bips higher, roughly. Right at the beginning of January. So the notion that like debts and deficits are driving the price action in the 10-year, I think, is wrong. Did we not have a deficit problem last year? Did we not have to roll $8 trillion worth of debt last year? Of course we did. And what happened? Yields declined alongside that environment. So I don't really follow that argument at all. And then the second question I have for the panelists here is when you have economic growth per Atlanta Fed GDP now growing at
No,
4%, what should the 10-year rate be? Because the 10-year
but hold
moves
on,
off
Joe.
long-term
Joe,
growth.
it's not in a
What
vacuum.
what what what
Joe, it's not
should
in a
hang on a
vacuum.
second, 1 second.
Joe.
What should the 10-year be at when economic growth Q4 right now forecasted by Atlanta Fed GDP now is at 4%, and you have a
So
10-year at
how much were
4.2?
rates,
Current
Joe?
dollar.
I don't.
How
Joe,
much were rates
one
cut? How
second. Oh,
much
here.
were rates cut
Oh,
last
here.
year?
Oh, here. 1
Right.
second.
So
Current
you have to
dollar.
factor that in. Go ahead.
Current dollar GDP or real GDP? What's the current dollar number? Because
Current.
I'll tell you what
Yeah,
Bianco said.
it's
I'll tell you what Bianco has said over the years. On a current dollar
like
basis, the
7.
10-year should trade at approximately the same rate as current dollar GDP growth. That's what he
Right.
said.
So
Right.
so this
So
so this
Joe,
hand
you
wringing
can't
about the
just make a
10-year being
statement
too
that
high is just, I
think
think, is
about how
just
much they cut
silly.
the short end. How many times did they cut rates last year,
The
Joe?
short end isn't directly impacted by the
Well,
Fed,
it doesn't
or the
Okay.
matter.
long
They
end
All
isn't
right.
they were
All right.
directly
cutting
impacted by the
rates.
Fed.
Time out.
My no.
Time out. Let me ask you a question, Joe. So people much smarter than I, like the folks at GavCal, they refer to like what's known as a Wicksell spread. You look at where interest rates are compared to level of economic activity. All right. So if you got real GDP of 3 or 4, whatever number you're running with, and you plug in whatever you want to plug in for inflation, 2, 3, whatever. I mean, everyone can put in their own number. Okay. So I mean, if you just want to say GDP 3, 4, inflation is 2, 3, rate should be 6, 7 kind of thing as a neutral rate, Okay. That's a theoretical answer. So, so the economy will be able to withstand that. So it's positive. It ain't good for the market, but it's a positive for the economy. So I would just say rates are too low right now. That would be my answer, Joe.
That's my point. That's my point. So like the reason I reacted like this because O'Hare was suggesting, oh, we got these high interest rates at 10-year at 4.2. I think it's nonsense. I
Yeah,
think
all
No,
right,
no,
all
I
right.
didn't say they were high. I said they're
4.2
staying
relative to the growth
persistently
rate
higher.
you're seeing is a low
Joe,
interest
I
rate.
said that
Guys.
I'm
Let.
saying they're staying persistently higher, even in
Okay,
the face of the Fed
okay.
Higher
cutting
relative to
rates.
what?
Counselor,
Not as
chill. Okay. You guys are more in agreement than you know. I don't think this is a fruitful apple to go down because I think we all agree rates need to be higher. All right. And I
Hmm.
think the economy can withstand that. But more importantly, I don't know that your favorite shitco on 30 times revenues with a bad looking chart and no business, that can withstand it. Which, by the way, Marianne, I want to turn to something else. So, Marianne, um, the mirror image of what you're talking about, real companies, real cash flows, real activity picking up, blah, blah, blah. So a few things. One, you pay less for growth in that environment because more growth is more plentiful. Whereas you go back 2, 3 years ago, you pay up for growth stocks in Mag 7 because that's one of the few places there are growth. Okay, so growth is more plentiful. That's number one. Number two, but more importantly, I think, and I don't want people to take this the wrong way, but I've written in the last couple of weeks a few times we're witnessing the death of speculation. The death of speculation. Or put it another way, what do I mean by that? Things which are totally dependent or wholly dependent or largely dependent on excess liquidity, liquidity, chart, narrative, vaporware. Okay, that stuff is getting obliterated. It's all going down. I don't care if you look at the quantum stocks, some of the more fanciful tech names, some of the high multiple growth names. It's one of the reasons I think so the AI trade is going to blow up as well. Sorry, Joe. Bitcoin, anything that's super liquidity dependent, all right, is getting screwed over royally. I call it the death of speculation. And one of the things, a real pet peeve with these guys. So we all know last year, oh, retail's one. It's retail, right? And you look at the garbage they're buying, okay? These are like summa cum laude graduates of the Dunning-Kruger Institute of Finance, okay? It's all about chart and narrative. Nobody does any work. Nobody looks at valuation, blah, blah, blah. Well, they're going to get an education, as my father would say. There's two ways you can get it, either by precept or by experience. They ain't listening to the boomers, me. Okay, Mr. Market's now showing what he's got. Oklo down 50%, quantum computing stocks down 80%, blah, 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 blah. So, Marianne, what do you think about all what they call, affectionately referred to as the shitcos and all the wildly speculative garbage and the really piss poor performance you're seeing from those names?
Well, it's good for markets to get that excess out. I mean, we have a lot of liquidity, George. That's why we have inflation, right? All the money that's been printed fiscally and monetarily shows up in markets, and that's where you get excessive speculation. And so I'm not surprised to see things like this. They're not sustainable. They blow up, but some of it can come back. I still think that we're going to have a blow off top in markets. I don't think we have. How I get there is I look at New York Stock Exchange margin debt. If you do some short term analysis on it, yes, we had a leveraged market, but we don't have leverage that calls major tops in markets yet. Based on the Bank of America Global Fund Manager Survey, we had everybody in the same trade. Retail basically had max exposure to equities. So I think what you're seeing is a whole deleveraging process, but not the end of the bull market.
Marianne, that's a really good point you raised. I want to go to two things you triggered me on that one. One, um, I got some from Stan Weinstein, but I think most of you smart chart guys, Nikoska, you, the rest, know all this, but it's for the folks. And maybe you could explain this. And if you don't want to, we get Nikoska to do it. But people sort of, the newbies, they point at the margin debt figures, and they're not taking into account they're not taking into account debt as a percentage of market cap. It'd be kind of like looking at total mortgage volume, but not realizing the value of the house has gone up so much. And so I get in the short run, rate of change in margin debt could be an issue, but more importantly, if you look at margin debt relative to market cap, it's nowhere. And I think
Correct.
that's really bad amateur analysis. You see this on FinTwit all the time. People just don't know how to don't normalize. So isn't that a huge so you concur they're just not doing it properly? Okay.
They're not
No. Okay.
correct.
And then you mentioned the Maryland's fund manager survey. I know you probably look at that more carefully than I do. What are some of the important observations or takeaways that you've noticed from that of late?
Well, investors were all crowded in the same trades. They were all in the commodity trades. They were all in GLD, SLV, right? That's one of the reasons why all that blew up, particularly SLV, just because it has a lot of, it's not as liquid. Everybody was all in max exposure to equities. So, when you get a crowded position, plus retail, Everybody was in, and everybody owned the same thing. Everybody was overweight tech, everybody was overweight the commodity complex. And now you're going to see that get unwound, and they're going into value, and they'll continue to go into value. But I don't think this whole growth narrative around AI has peaked yet. I think that narrative will eventually come back again, and we'll go into a blow off top. One of the things that I've been tracking is the behavior of our market compared to the late 90s and the peak in 2000 and the 1920s. And it's staggering how correlated they are. I still believe we have a blow off top very similar to what we saw in 2000 and the 20s. Maybe not as bad because we have better regulation than the 20s, but I think we will eventually have a blow off in AI tech, that we're still in the probably maybe the sixth inning, the seventh inning, before the blow off.
It's interesting. All right, my friend Eric, who's been waiting quietly. Eric, good to see you. What's on your mind, Eric?
Yeah, well, I agree what she just said about AI. We're in the last innings. Hard to say exactly when because we can't predict the future, but there's definitely a correction coming at some point. The fact that Trump decided on Friday, to me, he said he decided to go, okay, all-time high stock market. He tackled with India. He got his deal there because the Europeans got it first. Then he wanted his. He's aiming for the midterms. So he's starting to get deals with India, which China is going to tackle a lot. That tackling will ease off a bit on gold. There's two components to gold. There's the money printing and there's the trade war, geopolitical uncertainty, and whatnot. That part, if Trump decides to ease it up, it's up to him. It's really up to one man called Donald Trump. He's the one causing all that. He can decide to tackle it and ease it off a bit, and then gold will finally be able to consolidate a bit lower where it didn't print enough volume. That's a volume profile thing. But in the long run, that the fiat debasement, which is going on, will continue. Governments will continue to need to service their existing debt plus new debt that they're taking. So we're on a down spiral throughout the Western world and many other countries in the world, even all the way to Japan.
Right.
The gold will remain steady for that. We may have a consolidation progressively because of that geopolitical
Yeah.
factor.
So Eric, let me ask you: do you think, because you were right in the gold trade last year, do you,
Mhm.
between now and the end of the year, do you think gold and silver go up, down? Do you like gold and silver for not the next 3 weeks?
Somebody
I'm talking the rest of the year. Do you think gold and silver are higher at year end?
I'll say two things for that. If somebody's keeping it for 5, 10 years, keep it. No doubt about it. If you just want to do it for a shorter time frame, if you rode it and you had nice profits, start taking profits at 5K. Yeah, don't be too greedy.
All
We
right.
had a nice
Okay.
trade
All
with
right.
5K.
Appreciate
Yeah.
that. All right. Let's get.
George,
Yeah.
along the
Yep.
lines of what
Yep.
Rand Bartels just said, I posted in the Nest the margin debt divided by total market cap over the last 50 years. And if you look at the range, we're at the low end of the range going back to the mid 90s. So the
Tina,
peak.
that is a brilliant graph. Thank you for posting that. It's brilliant. It's brilliant. And by the way, I'm sorry, I am going to name names because you have some of these charlatans on X, the Captain Obvious crowd, Kobayashi Letter or Mohammed El Arian, guys who've never had original idea in their lives, chortling on about a high level of margin debt. You've completely took the air out of their tires, Bitcoin. Thank Tina. Thank you for posting it. Really, really appreciate that. That's a great chart. Everyone should follow Bitcoin Tina, and please look at the Nest. He's got that one absolutely nailed. You came with the receipts, Tina. I can count on you for that. Anyway, all right, let's keep moving here. Thomas, you've been waiting quietly. You have a question?
Yeah. So you know what? Okay. So basically basically to a bit Bitcoin Tina. I was going to say the one thing. So for me, I've never been in crypto. I'm not a bull or a bear on it. I'm agnostic. But one thing I was going to say is, if you ever heard a guy named Gerald Celente, he was saying the whole thing about Bitcoin. I know.
Nope.
Oh, don't do it. Okay.
No. I'm going to mute you. Sorry.
Sorry.
We're not going to listen.
I
There's
know.
certain
I'm
things.
sorry, George.
No. He is a certified crackpot.
Oh,
I know
he is. Okay.
you're a good guy, but please ask.
I
Listen.
got it. It's
But hold on. No. I want to say something. You just triggered. I want to say something.
yep.
Hold on. I want to thank everybody in this space, from Marianne to Joe to Eric to Nikoski to O'Hare and Bitcoin. Everyone's not here. Do you notice we've been going an hour and 20 minutes? There hasn't been one mention of the goddamn Fed. What do you think of Kevin Warsh? Okay? All right? We're trying to keep this in the straight and narrow. All right? Talking about Kevin Walsh is a waste of time. Talking about Celente is a complete effing waste of time, right? So I'm not going to allow it.
Okay,
All right.
fine.
If you have another question, that's fine, but we ain't talking about him.
Okay, yeah. So, okay. So yeah, fine. No problem.
Thomas, I'm sorry to be so hard.
No,
Thomas, I'm playing with you a little bit,
no,
okay? But
got it.
seriously, the guy's a
100%.
complete clown. All right,
Okay,
go ahead.
no,
Go ahead.
100%. Okay, so you know what I was going to say is now. Okay, so basically, I basically agree 100% with the margin debt and all the stuff you said. But then one other thing that could be kind of interesting. I actually know a bunch of people that basically took out money on their house with HELOCs and all that stuff, and they just put it in the market. They don't really margin it, but it'd be really hard to find out how much of that house money is also invested or whatever. It's without.
Yeah, and Thomas, you made a really good point because another thing too, house money and also people like taking out loans and stuff. Yeah, you're completely right, and that's the hidden leverage we really don't know about. So I think it's something to worry about, but right here, right now, it hasn't that concern has not manifested itself in the charts. All right, so
Yeah,
listen.
the other thing to
Yep,
think about is we have all these triple levered ETFs that were
yep.
not around. And you know what? If you go over to Europe or some other continents,
That's actually a
they have
great point,
some
Nikoski.
ETFs that
That's a
are
great
5
point.
to 7 to 8 times.
Yep.
You know that? Like London is ridiculous on what leverage they allow.
All right, you know what, Dave,
ETF.
you know what I'm going to do? I'm going to get some guy with the numbers. One of these
Guys,
guys.
and I just want to point one thing out.
Yep.
Bitcoin Tina is right. I like that chart. But here's the thing that Nikoski makes a really great point. A lot of these instruments that are already levered off the shelf,
Yeah.
those have
Oh,
taken a
yeah.
lot of that.
Here. Let me overrule you. Okay, Okay. So
And
I
hold on
agree with
one
you, but
second, George.
no.
And the options
Hold on.
activity, the options.
Let me
Yep.
make the point. I know where you're going with it.
Yep.
Okay. What we need to do is get someone to take that margin debt number and then try to figure out the size of the levered ETFs and add it all together and see what
Yep.
we get.
And by
Okay.
the way, and the options, the zero DTE
Correct.
options, short-term options.
So
Yes.
I don't
But
know.
and contracts for difference.
Yes.
Correct. So I don't know if it's Michael Howe or Cantro, one of the good bean counter guys that's got the data, unlike you,
Right.
all of us, who just BS. One of the, actually, you know what? That make him really look smart. It's a great topic for someone to
Yep.
tackle. So, all right. So
Well,
enough of that. All
you're
right.
double counting there, right? Because a lot of the way the 2x and 3x leverages work is they go into the options market, so that you're double
I
counting.
know, Joe. You can massage the data. We'll figure it out. Okay. All right, guys. An hour and 23 minutes. Tip off is in 7 minutes. I got to jump on the subway to get there. Marianne, how can people find you, follow you? Do you publish, Marianne? Marianne's not here. I'm going to get her back up. So I don't know. Final thoughts for anyone else on the stage?
I just want to say I think Marianne, and I don't want to jump. She's not here, but that International Metals Fund is PICK, which is an ETF. I'm going to
Okay.
assume that's what she meant, but I don't want to jump to conclude that I know.
Okay.
So,
Yeah, and
All
I'll
right.
I'm
just say to
back.
you,
She's
I'm
back.
back.
She's back.
All right. She's back. So Marianne, you're going to have the last word. This has been an inspiration. I just want to say, Marianne, I don't know if it's because you're good looks or you're such a nice person or your great advice. We've had a huge room here today, and I would like to ask you if maybe on a quarterly basis we could do this with some regularity because you really are a
Sure.
crowd favorite. I think it's good for all your clients as well, not just people here. So, Marianne, how can people follow you? Where can they find you? You're sanctuarywealth.com, or where are you?
So I'm at Sanctuary. The best way to follow me is on LinkedIn. We don't post all of my work, but you'll have a general idea of what my views are on the market on LinkedIn.
Terrific. All right, guys, this has been fantastic. Marianne, you have made my
George,
day. Yeah.
Gemini has a summary of the question you just asked. So, FINRA margin debt 1.23 trillion, leverage ETFs 250 billion, securities-based lending 140 billion, shadow leverage multi-trillion notional, and private credit
All right.
equity linked 1.3 trillion total market.
That's very helpful. We're obviously going to have to dig deeper on that, but we all know the question. We just don't know the answer. All right, ladies and gentlemen, this has been a great space. Marianne, this is the best space we've done this year, actually, and we have no one to thank but you. It's your fault. So there. All right, next Sunday, same time, same place, 11 a.m. This is awesome. Please sign up for the Substack. Please sign up for the conference. I think it would be great. So thanks, Bitcoin Tina, Joe, O'Hare, Eric, Dave, everyone. Terrific. See you next week. Take care. Bye.